Calls of the day. We're starting with Netflix today. Target at 820. It was at 780 at Morgan Stanley. Outperform or overweight? They're overweight. Oppenheimer's outperformed. They bump it to 775. So not quite as bullish, but nonetheless, both of these calls, they expect that stock to go higher from here. You own it in the QDVO ETF.
Yeah, I mean, I just think that they can continue to go higher. You can charge us whatever they want, and we're going to pay for it. And the advertising side, they now have 40 million members in advertising, so they can keep that model low and increase the cost of ads. Forget the content domination; it's about advertising and profits.
Okay, PayPal downgraded to market perform from outperform. Target $80 from 75 at Bernstein. This is a reasonably new play for you.
Yeah, look, the stock has run up a lot, so if you had a buy recommendation on it much lower because of how cheap it was, now it's less cheap. But I want to point out, this is a stock that's barely down on this downgrade. The uptrend has been pristine lately. I think it'll stay intact. I do have a stop loss in here somewhere. But PayPal is trading with an RSI of 60, so it's still very healthy uptrend. It's above both the 50 and the 200-day moving averages. That has not changed. It's 4% below 52-week highs, which it just set recently. And on a valuation basis, it's a 19 PE backward, a 16 forward, and they're expecting to grow earnings by 9% next year, and that's absent any other new developments. Alex Chriss, the new CEO, has been pulling rabbits out of his hat for the last year since taking over. And I want to bet with him, so I'm going to stay long.
All right. Honeywell downgraded to neutral from overweight. Target to 235. It's J.P. Morgan. Steve Tusa, by the way, the well-known industrials analyst over there. Kev, you own this?
Yeah, good analyst. Increased the price target, which I agree with. He claimed that the spinoff looks dilutive to him. I'm not sure I agree with that. We're going to be buying this on pullbacks. Over the next year, it will take some time to figure out what their revenue streams look like. But they were at free cash flow of $3.5 billion in 2022. They're back up over $5 billion for the past 12 months. Automation, aviation, and energy, they're going to benefit from the troubles at Boeing. We really like this name. I don't disagree with the call. We'll buy it on a pullback.
You know, 3M, Josh, felt like it was a one-way trade. The new CEO, the stock was off to the races. Everybody was in love with it, including you, Link. It was reiterated today underweight at Morgan Stanley. It's into earnings. $125 is the price target. What do you think about this call?
The problem with Morgan Stanley is they just don't know what time it is. Like, they're focused on the past. I understand it's a 78 times trailing PE, but this is a company that's getting over just a horrific period of lawsuits and settlements and regulatory stuff, and all of that is in the past, including prior management. So this is a stock now that is trading at a 16 forward PE. The median 10-year PE for this name is 17. So it's not overvalued by any stretch if you're thinking about the future, not what's already gone on. This is the second best performing stock in the Dow 30 this year. It's up 46% year to date. I'm not saying it's the cheapest it's ever been. What I am saying is they've turned the page. There's a new group of shareholders who have come in to replace the old ones. And I think that the analyst is reading from an old script.
PepsiCo got cut today, Kev. Target 183. It's TD Cowen. They did miss their revenue. What do you think about this one?
Yeah, I agree with this call. We sold this out of our flagship dividend strategy, and interestingly, it's in our growth portfolio. This is the 13th largest name in the Qs. Go figure.
Salesforce, overweight, 325. Piper Sandler. 10 reasons to buy it. I'm not going to give you all, but they have 10. You own that one, too.
We have small positions in Salesforce. They've initiated a dividend. They've gotten stronger from a cash flow perspective. We'd buy it on pullback.
All right, valuation, risk reward, free cash flow, blah, blah, blah. Adobe, overweight. I mean, we want to go through all 10? I mean, you get the point. Adobe, overweight, 635. Piper Sandler also. They have 10 reasons there, too. Margin, sentiment, valuation, blah, 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 blah.
Rewind this.
Exactly.
Same exact thing.
You know why they have 10? Because if it's like 9, people are like, wait, what?
I know. 5 wasn't enough. Let's go to 10.
7-minute abs.
All right. Nike got upgraded. We told you about that survey, I think it was yesterday, that Piper had as well, that teen survey, which was favorable for Nike. Shares got a bump. Today they're doing not much, but they did get upgraded at Truist to 97. You sold it a couple of years ago, and I guess no interest in getting it back?
No, it's still on our board. We watch it. I don't think a China play is going to turn it around, but I thought the information yesterday from that survey was legit. It was relevant, and I'm excited for them.
Yeah.
We're not buying it, but I'm happy.
Okay.